Hey, Dustin. We are
Hello.
live.
We are live after the flash sale of last week. Hope you took advantage
The flash sale. What oh,
in the
oh my
market.
gosh. Yeah, on what was it? Friday, right?
Yeah, I think it
Yeah,
was
that's
Friday.
actually worth talking about a little bit. Because you see your portfolio dropping, 3, 4, 5% in one day, and it's quite unnerving, right? Like, I don't know how your portfolio did, but mine, I think, was down 3.5, 4%, something like
My
that.
portfolio at the peak was down 10%
10%,
because
which is
crypto took
kinda
a big hit.
yeah, yeah, which is kinda crazy because if regardless of your portfolio size, if you take a 10% hit in one day, when you do the math, because you take the dollar amount and you're like, "Well, if I lose this many dollars for 10 days, it's over. It's
You're
like down
done.
to
Yeah.
0, right?" Like, the psychology of that, I think, is very, very difficult to take, and, granted, if you lose 10% each time it becomes less and less in terms of the dollar amounts, but it's very easy to be like, "Okay, I cannot afford 10 of these days," basically, because the portfolio goes to 0. Whether you start with $1,000 or $1,000,000 or $1 billion, it doesn't matter. You take a 10% hit, 10 of those dollar amounts, and you're down to 0. So, uh, I think the psychology of that is pretty difficult to take.
Yeah.
Um,
I'm totally twisted, so I was thoroughly enjoying it. Um,
did you buy some stuff?
I did buy some stuff, which we'll get into. Or I bought one thing. Because again, I'm really trying to build up my cash position. But
Okay.
going back to like a 10% drawdown, like I have very high conviction in the stuff that I own, which helps me not panic.
Right.
Um, and I also feel a lot of gratitude when I do have these drawdowns that I'm like to experience a big loss. Like I'm in a very fortunate position. You know what I mean?
Yeah.
Like,
To where you experience a big loss, but it's not affecting you, and you
right,
can not panic about it.
right. So that I think helps ground me.
Yeah.
Um, but do you want to get into what I purchased?
I think I saw the notification and I was very proud. I was like,
Yes,
"Wow, he's joining the club.
I'm joining
He's
the
joining
hive.
the hive."
The hive.
I love your puns,
I got stung by
Dustin.
the bee.
Okay, tell me, what did you do and what
So
percentage of your portfolio?
so this was the first purchase I've made, I think in 5 months. The last purchase I think I did of stock that I made was maybe like when Google had the big drawdown.
Okay,
Because again, I'm really trying to sell and build up my cash position and consolidate my positions, right? Like I completely sold out of Shopify a week or two ago. And then I undid all of that work and bought into Bumble. So when you initially, I wasn't thinking about Bumble until you started buying, and that put it on my radar. And initially, I was not interested. I didn't find the uh, dating technology space to be an attractive space, pun intended.
okay.
Um, but
Just like puns
I can't
embedded
help
all over the
myself. I'm a dad. Um,
place. Before you were a dad, you had the puns going for
Shh,
you.
don't give it away. Don't give it away. Uh, so after talking with you, and like, watching your moves and hearing your philosophy behind Bumble, I eventually was bought in. Um, and I was bought in like months ago,
Okay,
but I don't again, trying to build up my cash position. I wasn't gonna jump into it just because I bought into like it was gonna do well. I was waiting for a specific price target or two.
right.
And Bumble happened to hit my first entry point
Nice.
during the drawdown, which was $5.23.
Okay,
And it's interesting because if you look at Bumble, let me find my mouse, and let's go back to the week view. So if you look at Bumble, I think when I was initially looking, it was like, okay, around $5 is a good place to buy. And this is a
right.
great lesson. And let me zoom in here. This is a great lesson of if you want to enter or exit at like a whole number, you never really should, or like a number that a lot of people might be looking at,
Hmm.
because it dropped down to
Just over
around
$5.
yeah, $5.09. So if I was looking to buy in at 5, I would have never gotten it.
Right.
But I put my entry point a lot higher than that, which was 523. So I ended up buying like right over here, which, was not the low, was not trying to catch the low by any means. I just thought it was a,
Right.
a, a good price. And so far I lucked out. With that said, I wouldn't mind if it continued to drop because then I will buy more, but at least I have exposure. And then to your question earlier, how much of my portfolio is it? It's 1.33%, which makes
That's
it
a
my
that's a
eighth largest position.
that's a good starting position, actually. And then you start paying attention, and then they start having quarterly reports, and then you're like, okay, well, the quarterly report was good, but the price still went down, or whatever. And then you can sort of like
Right.
be like, all right, market is slow in recognizing what is happening, which happens for me. Like in virtually every stock I get into, it takes a while for it to start taking off,
Right.
um, but eventually the market sort of recognizes that, okay, there's a mismatch between the performance of the company and the stock price, and then once it corrects, it overcorrects and shoots up in such a way that, like, now I'm in this position of loving these two companies that make up more than 40% of my portfolio still, like Rocket Lab and Robinhood, and I'm still trimming these positions despite loving the companies, right? Like,
It's so funny. Like, people think that the market is efficient because that's what they're told, and it's
right,
not, right? Like,
right.
there are a ton of inefficiencies, and it goes both ways.
Absolutely, absolutely. In fact, I was looking up a couple of company names that have had this that are great companies, and they have these incredible run-ups of their stock. Like one is Atlassian. I don't know if you've ever like looked at the stock
I
of
have,
this
yeah, they were on
company.
my watch list for a while. I never ended up buying in.
Yeah. So if you look at the sort of like 5-year chart on this company, what's crazy about it is that they peaked up here in 2021 at $450 per share, and you can buy it today at $150, right? So, and you would think that, oh my God, this company must have done terrible over the past 4 years. But then you look at their earnings and look at this earnings report. Like
Killing it.
yeah, it's like everyone is at record earnings since 2021. They were at like $600 million in revenue. Today they're at like 1.38 billion for the latest quarter, more than double, right? And this is a situation where the stock price just got way ahead of itself. And back in 2021, it was 3 times its current market cap, which is like already 40 billion, but it had like $120 billion market cap, but with less than half the revenue. So with less than, about 2 billion in revenue, it had $120 billion market cap. And this is where, like, I'm talking about, like, when there's this massive mismatch between the price of a company and their actual performance, uh, it can get away from you. And I like to remind myself of this type of performance where, do we have this happening with some of my holdings? And if the, like, it's possible. It might be over here, by the way. Like it might go up and double again over the next coming few months for like Rocket Lab and Robinhood. But it's also possible for them to crash and like stay the same price for the next 3-4 years until the revenues finally catch up with where the uh, with where the um, actual performance of the stock is. So I worry about that kind of thing all the time, and that's why when I trim, I call it de-risking. It's not like necessarily like selling this to buy another stock. I sell it to de-risk, and then I happen to have more cash, and then every now and then I'm like, well, Bumble is got the reverse problem, right? Where the performance of the company is way ahead of its current stock price, and I'm happy to buy Bumble or more of Bumble, which I did again last week as well.
Right, so going to your portfolio, you basically have been cycling out of Rocket Lab and Robinhood and cycling into Bumble and Rivian.
Yeah, but not for the same amounts. So if like one of the things that you'll notice with my portfolio is that my cash position is around 28%. And I think in the last, I would say, like 2 months ago, 3 months ago, my cash position was probably closer to 20%. And so the cash position has also been growing,
Mm.
both as a percentage of my portfolio, but also in terms of the dollar amount as well, because my overall portfolio is also up quite a bit. Um, so yes, I have been selling Rocket Lab and Robinhood and buying Rivian and Bumble, but not for the same amounts. Meaning, I've been selling more of Rocket Lab and Robinhood than the amount of Rivian and Bumble that I bought. And part of the reason for that is because I do want to increase my cash position as I'm sort of like trimming Robinhood and Rocket Lab. So that's probably primary goal. And then so that if there is some kind of a hiccup or sort of like major market correction, we had like a 1 day correction that rebounded on Monday, between Friday and Monday, just off of one tweet from President Trump. But those types of things could last days, weeks, months, and I want to have a large cash position to be able to take advantage of them. But also, I want to see what happens this earnings season, to see whether or not I want to jump in more for Rivian, for example. Which every time I watch a interview with RJ, I absolutely love what is happening there at Rivian, and I get excited about it. And there was a new interview that just dropped yesterday with RJ, and I'm like, yes. And again, he's saying all the right things. I'm like so pumped. But with Rivian, it's going to take time before this company's performance finally shows that they are a legit company that deserves some respect, and they get to profitability. That time frame could take as much as 2 years. So there might be lots of buying opportunities over the course of the next 2 years, or who knows? Tomorrow, the market might decide to recognize Rivian as a major player, and the stock doubles and triples and never comes back. You never know when
Yeah, you
these
just
things
don't
might
know.
happen. So, but
Yeah,
yeah,
yeah. You can get a sense of where the puck is going, but you don't know when someone's going to hit the buck.
that's
You
right.
know.
That's right.
Yeah.
Yeah,
Um.
and like speaking of the puck and where it's going, there is like a few things that are working in Rivian's favor. One is that the puck in the car industry is going the EV route. We're already seeing that transition, but it's only at 10% of the market, and someday it'll be 100%, or at least 95% of the market. Now, there's debate as to when, whether it takes 10 years or 100 years to get to 95%, but it's getting there no matter what, because we have to get off of fossil fuels. There's no question about that, right? Um, so because we will run out at some point in time, like whether that's 30 years from now that we run out, or 100 years from now, that might be debatable, but the fact that we are going to run out is not debatable. So there's a sort of transition to EVs that is definitively happening. And then the other thing that they have going for them is this sort of like full stack, which is that car companies that are OEMs of like 50 different manufacturers as products, and putting them all together, where like the brake is done by one company, and the electronics and software for the brakes are done by that company, and then the navigation system is done by another company, and like the automatic windows are done by another company, and all the softwares cannot talk to each other. That's the sort of old way of doing the vehicle business. And the new way is that like basically everything is done by the same company, or at least like a single OEM that puts it all together. And Rivian is one of those companies, and Tesla is the other one in terms of the
Right.
US based ones. And Chinese companies are doing that as well. But everybody else has got this sort of like massive problem of how do you consolidate the components and software of cars. So that transition is also going to happen, and Rivian is in a great position to both take advantage of it, but also to license their technology to others, as they have with VW, for example. So a lot of goodness there. But
Do you ever
anyway.
think we will see gas cars that have self-driving?
That's a possibility. I'm sure that we will, just because like someone is eventually going to put that on there. 90% of cars are still gas cars. So like by the time, I suspect self-driving capabilities are going to be far more common in the next, like, let's say 5 years. And then 5 years from now, if no gas car has done it yet, somebody will, right? It'll be like, okay, we're still making gas cars, and self-driving is an expectation now of every buyer. So we got to put, self-driving capabilities on gas vehicles as well. And I think it's not that they can't do it, by the way. Like, they can. They already have a lot of the electronics and components and software to be able to do it. It's just that the EV companies, they started from scratch and they had to build all of the components themselves and all of the software for all the components themselves. So it's easier for them to do it than it is for the gas car companies to do it.
Gotcha. Yeah, I wasn't sure if there was like any power constraints or not with the gas cars, but yeah,
No.
I wouldn't think there is.
Yeah, they have a massive generator on them. So yeah, you can create all the power you need from that engine.
Right.
Yeah.
Should we get into earnings this week?
Yes. Actually, why don't we have you get into the earnings, and we can discuss them a little bit. But we had the banks reporting earnings this week, right?
Yes, and a lot of the banks beat. Let's see, we have JP Morgan beat by roughly 4% for revenue and EPS.
Oh, before you move on to the next one, or maybe you
Yeah.
just stay on this one. What is this one? Goldman Sachs. They
Goldman
also
Sachs,
beat
yeah, beat 7%
7%.
revenue. Yeah, revenue and 11% EPS.
Can you zoom in a little bit on that?
Yes.
Oh, wow, that's a pretty substantial beat. But what is that positive move tab? I know we just released this feature, and since you're the
Yes.
product guy on Earnings Hub, I gotta like have you demo some of these cool
So
things
yeah,
that
so we
have.
released a big feature. A lot of users requested this, where we show what the move was before earnings and after earnings. So in total, the move overall was positive here. And this, you could look at the move historically, right? So like we can go back in time. If, yeah, let's just go to Q3 2024, and you could see like, this was also positive before earnings move and then negative after earnings move.
After
And you
sell
can
on the
see,
news type of thing.
yeah, exactly. And then you could kind of also like just scroll through and see like positive, positive, negative. And on top of that, if we go to, well, actually, I could just do the history tab right here. If you wanted it in just a table view, right, to see the exact numbers,
Oh,
you
nice.
could just kind of go through and see what the pre-move was and what the post-move was. So sprinkled
Very
it
cool.
throughout Earnings Hub. But yeah, I'm very, very, very excited about this feature.
Awesome. Okay, what else, who else reported this week that was kind of interesting?
So again, like
BlackRock.
banks-ish, BlackRock, 4% beat on revenue, 2% beat on EPS. Citi, 4% beat revenue, 25%, over 25% beat
Wow.
EPS. And then let's see the move here. But the move wasn't like that crazy. I mean, 2%.
But still, I mean, Citi is a massive company though. Like, so
It's true.
3.8% and 2% before earnings, 3.9% after. That's like a combined 5-6% move, right? Like,
Yeah.
that's pretty decent
Yeah.
for
And
such a huge
arguably,
company.
yeah, moved better than I think a lot of the other banks. And then we have
Wells
revenue
Fargo.
here. Yeah, Wells Fargo moved 1% for revenue and 12% EPS.
Awesome.
So that was all yesterday. And then we also had like Bank of America today. Still positive.
Wow, all the
Still
banks are
positive.
killing it.
Yeah.
Every one of them has had a beat on revenue and a pretty substantial beat on
Let's see.
EPS.
Yeah,
So
look at Morgan Stanley.
holy cow, almost 10% beat on revenue and 33% beat on EPS. That is incredible. And this is, again, like not a small company. What was their move? Up 4.7% today.
Yeah.
Wow. That is
Yeah.
impressive.
Crazy.
And again, it's like a $260 billion company.
Yeah.
So
260.
So we're off to a great start with earnings season. If the tech companies report like this, which I think they're very likely to have even bigger beats, we might be in really, really good shape for having a great earnings season.
Well, right now we do have ASML, which reported this morning as well, and
How do they do?
not as well as the banks.
Okay.
Revenue missed by 0.25%, and
Okay.
EPS beat by basically 1%.
Okay. What was the
Um,
price move?
and let's see, price move was positive.
2
So
point. Okay.
yeah, roughly
And
2.6%.
what was the revenue? Like, go to the earnings tab. What was the revenue expectations for, or like, okay, so the 8.8 billion versus 8.79. Okay. Um, Very cool. But the real sort of tech start is what, next week? Who's reporting next week?
Well, tomorrow we have TSM.
Oh,
Uh,
TSMC
yeah, TSMC. And then next week we have Netflix,
on
Tesla
Tuesday.
on Wednesday, which will be huge, Intel on Thursday. Um,
Yeah,
so those are like the biggest ones
the
I see,
three
and then
big ones
there's
next week.
other names as well.
Very cool. And then the big week with all the major tech companies is what, the week of the 27th? Yeah.
Yeah, we
We
have
got
Microsoft,
Microsoft, Meta,
Meta,
Google,
Google. Yeah, all on
all
the
re
29th.
okay.
And then the following day, Amazon, Apple.
While we're sort of demoing Earnings Hub, I know a couple of things that is might be worth mentioning. One is that we introduced new prices. Do you want to show the new pricing page? Just if anybody is listening,
Yeah,
we'll describe a couple of the pricing things that.
let me log out here so we could see the pricing page um, from like what other people will see. Okay.
So we basically introduced a new plus plan that's $4 per month or $4 per month paid
Paid
annually. So
annually.
it's $48 for a whole year, and that
Yep.
basically gives you like the vast majority of the site, right?
Yeah, we significantly reduced like what our cheapest plan was by adding this plus plan. Um, and plus you get, it's not like we cheaped out on features. Like plus you're still getting majority of the functionality, and pro you're still getting some good stuff. Like pro, the earnings price moves that we just showed off, that's in the pro plan. But price or the plus plan, you get access to all of our premium alerts, you get access to live calls, multiple watch lists, fully customizable earnings calendar. So a lot of good stuff there.
And then for our listeners, we have a promo code that they can use to get pro for 50% off, right? Like what is that
Yes.
promo code?
Yeah. So
So
the
if
promo code is BHR by Hold Ramp, BHR 50, and you get
okay,
50% off your first year of Earnings Hub Pro. So that brings the price down to $8 a month paid annually.
at $96 per year,
Yeah.
or for the first year. Okay.
For the first year. Yeah.
Yeah, so uh, less than half, base or half,
Well, half,
50%
not
off.
less than half, not more than half. It is just
Yeah,
half. It's
it's
50%.
exactly half. All right. So during the checkout process, if you want to take advantage of it, you just have to type in BHR50 in the promo code.
And I think we'll have a link in the description, at least on YouTube, with the link will automatically apply the coupon code for you if you're interested.
Okay. Um, Before earnings season, this is sort of like the calm before the storm. What
Mhm.
else do we have to talk about?
Uh, I think we actually blew through our
Main
agenda
agenda.
today,
All
so
right.
we could spend a lot of time on listener questions if
Let's do
people want
it.
to ask it. You
So
know,
if you are watching this and if you have questions for us, feel free to put them in the chat on YouTube, and
and
we'll
on
try to
X,
get to them. Say again, and
and
on
on
X,
X,
yeah.
yeah,
Uh,
yeah, that's what we check out.
and then let me also take a look at some of the community questions that have been asked. Okay, Um, People have asked me, what do I think about AMD? What are your thoughts on AMD, by the way?
I don't have any strong thoughts on AMD. Um, I'm
Yeah,
not
go
that
ahead.
into like the chip manufacturer space. Not that I'm not bearish on it. It's just like not an interest for me.
Yeah, that's kind of how I feel. And when Nvidia was sort of like rocketing up, starting a couple years ago, I basically was of the opinion that nobody has loyalty to the chip manufacturer, and therefore, like, this is something that could easily get switched away. And I think I talked a little bit about this, that I missed out on Nvidia because I thought it would be relatively easy for the back end companies to switch out. But what I didn't anticipate is the amount of demand for all these chips. Like OpenAI is announcing partnerships with everyone and their mother. They announced $100 billion deal with NVIDIA, and then the next day they announced another deal with for 10 gigawatts of data centers with AMD. Then the next day they announced another like few gigawatts of uh, chip manufacturing and partnership with Broadcom. So uh, they don't have loyalty to any of the specific chip manufacturers, but it turns out that they need so much of them that they're trying to buy out like all of the capabilities of all of these manufacturers. So that's super fascinating. Adrian, do we have any user questions that are coming through at all? Or if not, we can also wrap it up early
Oh,
today.
we definitely have questions.
Oh, we do? Okay.
Yeah.
Should we just,
Adrian, out. We can't hear you. I don't know.
I don't know if we lost Adrian or what's going
Mm.
on there.
Okay, wait. Now we can hear you. I think you were like extra muted.
Yeah,
Yeah.
there we go.
Okay, can you hear me?
Yeah.
Yeah, we can hear you.
Sorry, I don't know what happened. It looks like okay. Yeah, so we've got people just want to know your opinions on several different companies.
Okay.
So we've got first up Tane Somani, sorry if I messed up that person's username. Lemonade, Oscar Health, Galaxy Digital. I don't know if you guys have any thoughts on those.
So Lemonade is insurance company, if I remember correctly.
Yeah, I could speak on Lemonade a little bit. I used to own Lemonade, because I liked that they were. It seemed like they were really changing up the space, and a lot of younger clientele was going to them. But every time I've needed insurance, they've always been very expensive. Like they broadcast low prices, but you're getting like nothing for it. So to get real insurance, it ends up being more money, at least in my experience.
Right.
So because my experience has been negative with them, I ended up selling that position a while ago, just because I couldn't get behind, like,
The
I don't know,
product.
my own personal experience, I guess.
I think that's like a very valid concern. I mean, like Lemonade has had a lot of fans on X, especially. So it has come on my radar as well. Stock seems to be sort of up and down quite a bit, pretty volatile. It does show that it's been down on the 5 year pretty significantly, but up on the 1 year as well. Year to date is up 42%. I don't have a strong opinion on Lemonade. The numbers themselves don't look like ridiculously great price on the stock. Like a $4 billion market cap for a $600 million revenue company is not particularly cheap, and it looks like they're still not profitable. Just looking at the sort of bare numbers over here in this. Here, let me zoom in so that if anybody is watching, they can kind of follow along as to what I'm looking at. Their earnings hub score under market cap 4 billion, revenue 600 million, and negative EPS of $2.83. So not yet a profitable company. Not an exciting space in terms of insurance in particular. So and Dustin, if your experience has been like negative on an individual basis, I wouldn't be super excited about it. Oscar, if I remember, that's a
Healthcare.
healthcare company. And
Yeah.
hold on, I got Let me put
And
it
our
on the.
mutual friend Hamid, James, works there.
Oh, really?
Yeah.
Nice. So this is one of those where I don't know anything about health insurance space, so I haven't like dived into Oscar at all. But it doesn't look like they're yet a profitable company, but revenue-wise, pretty substantial. 10 billion for a $5 billion market cap seems kind of low. Like price isn't like ridiculous. Year to date, the stock is also up 50%. Interesting, but again, not my wheelhouse. What was the other one?
Galaxy.
Galaxy Digital,
Galaxy?
yeah, GLXY. I could also talk about my perspective on this. So this is like another crypto treasury company. And again, I'm very positive on crypto. My concern with all of these companies, so when I say all of these companies, I'm talking about Bitmine, I'm talking about MicroStrategy, is none of them have survived a crypto bear market yet. Like obviously MicroStrategy has been around, but this is a new strategy for them, right? They started accumulating, I think, in like 2020-ish. So if you have an interest in, or if I had an interest in any of these companies, I
You
would
would just buy.
I would wait to see how it does when eventually there's going to be a bear market, because crypto is just a very cyclical asset. It's not like the stock market where it's going to go up for years and years and years, right? Like it's realistically going to have a bear market within, I would say, the next 2 years. So I would make sure that these companies can sufficiently survive. Otherwise, you end up with like an FTX situation or a BlockFi situation. But you have all these companies and crypto assets that just fail because they can't survive the bear market. So I would rather be late and confident than early and not confident in this type of investment.
Okay, yeah. No, that totally makes sense. And in some cases, like MicroStrategy is an example of which, like the reason to own them is because they own a bunch of Bitcoin, and it's like, why not just own the underlying asset,
too, yeah.
right? Like, seems less risky, especially since they seem to be super leveraged. I mean, I guess if you wanted to have, leveraged exposure to Bitcoin, that
But
might
then
make
you
sense.
do a
But then,
leveraged ETF,
right, that's
right? It's
focused
more direct.
100% on that. Yeah.
Yeah.
As opposed to MicroStrategy, which actually has a software business, if I'm not mistaken, right? Like, so
Yeah, that's how they
they
sort
used to be a software company before.
And Bitcoin's still software. So they
All
never
right,
left.
let's go on to another question.
Okay,
Adrian.
someone wants to know about if you guys have any opinions on Mercado Libre Inc.
It's a very popular stock on Savvy Trader. I know a lot of
It
people.
is a popular stock. Let's see. What's their symbol?
I think it's
Mercado.
MELI.
Meli. Okay. First of all, it gets an A on the Savvy or on the Earnings Hub score, which is not easy to obtain, but you have to have pretty substantial revenue growth to get an A on the Earnings Hub score. And Mercado Libre appears to have that, 38%. You have to have good EPS growth, which it has that, 46% EPS growth. And decent on PE and price sales ratios. So PE is it's a little high at 50, and price sales 4.3. Depends on the sort of market that you're in. 4.3 could be really low for like tech companies, and it could be really high. What does Mercado Libre do?
They're like Amazon, I believe.
Oh, e-commerce marketplace in Latin America with more than 218 million active users. Yeah, that's very interesting. I'm not in this. It's not on my radar. I generally would not invest in a company that's outside the US, like unless I really know the company or industry. But the fundamentals on this don't look bad.
What's your hesitation on investing outside of the US?
I would have no sort of pulse on like for example, if I was an Amazon stock owner, shareholder, I use Amazon on a daily basis or a regular basis, right? There's like literally Amazon packages arriving at my door every week. So So if I, for example, started switching to somebody else for some reason, then I would have a sense that if I'm switching, then other people are probably switching as well. It's not good for Amazon, right? And I might have a better pulse on whether or not I should be selling this company. With a company that's primarily doing business in another country, then I have no pulse on how they're doing. This was sort of like my same reason for DoorDash versus Grab. DoorDash is US based, similar multiples. Grab is Singapore based, like focused on the Asian market, with similar multiples of revenues and price sales ratios and things and profitability. So my inclination would be to get DoorDash instead of Grab.
That is actually a good segue. Do you have any other? Jordan Sabinski is asking if you have looked into Grab. It sounds like you were starting. I don't know if you have anything else to say about Grab.
Yeah, I mean, I looked into it, and it doesn't seem extremely cheap to me. It seems similar to DoorDash, and I use DoorDash as a customer. So if I was going to get one of those companies, I would probably get DoorDash instead of Grab. But that's only because like I personally like to have an experience with the companies and stocks that I own. I prefer to have that experience as opposed to not. Most of the companies, I think, with the exception of Rocket Lab, I have some kind of personal experience with them as well.
We have someone asking if you have thoughts on rare earth, minerals, battery, and metal companies. Any of them are interesting to you?
Dustin, let me let you answer that question first.
I mean, out of these, the only sector that I've considered would be batteries, which I dabbled with QuantumScape and Bloom Energy before it blew up in a good way. I don't know if you've looked at Bloom Energy, Hamid, but it's gone like berserk, and I have not seen any of that upside.
A good friend of mine put a significant portion of his portfolio in it. Bob, who you might know.
Of course, Bob.
Yeah. And no, I did see that it has absolutely blown up. And and like, no, I don't know any of these sectors. So I personally like rare earth minerals. The way I look at it is that, yes, we need them. I don't know which companies are going to succeed in executing on them because I don't know the sector very well. It's outside of my wheelhouse. But more importantly, also, there is, again, no loyalty to a particular company, meaning if another company can provide the same materials cheaper, there's no reason for a Tesla or Rivian or whoever needs these materials to buy it from one company over another. So the idea is that if there can be competition in these sectors, that competition is good for the buyer, not great for the individual companies, right? So I'm not a great. Again, it's outside of my wheelhouse. I don't know those sectors very well, so I have avoided them.
Have you ever thought about, like, if you believe in the sector, like rare earth minerals, but you don't know exactly which company to back? Have you ever thought about like investing in an
Just buying the
ETF,
whole
like focused
that invest in
on
the entire?
Yeah.
I haven't. I mean, largely because I feel like there's other opportunities that I'm more excited about, right? Like in sectors that I know well. So again, when it's in my wheelhouse and I'm excited about a particular company, I would rather just bet there. I'm not looking to have a lot of diversification of investment. My diversification is having a lot of cash. That's how I cushion the falls, if you will, is using cash. But the strategy is to sort of like make larger bets on companies that I have more conviction in. And the way that conviction comes is firsthand experience. Like I shop at Costco, therefore I know Costco. I buy Lululemon outfits, therefore I know Lululemon, right? But then like if the stock price happens to also be ridiculously cheap and I have that personal experience, that's sort of like the perfect combo for me, right? But in both of those cases, or in Costco's case, the stock price is way out of whack. But in Lululemon's case, it used to be out of whack. It's actually getting pretty attractive now. So So that's one that's come on my radar more recently. It's not founder led, so I'm not as excited about
Did
it.
you see
So
the
you know,
founder like took out a full page ad to complain that like he doesn't like the direction of the company?
no, I missed
Yeah.
that. I haven't been following the company very closely. So what was he saying?
I'm paraphrasing because I wasn't fully following it, but um, I think he was basically adding at the company has lost its soul pretty much, like lost its direction of
Yeah,
like
see,
what made the company. Yeah.
that happens when they lose the founder. You know, like they become overly focused on revenues and profits, and in the short term, and then all of a sudden in the long term they find themselves, wait, why are we not growing anymore? And well, it's like because you weren't doing the right things 5 years ago or for the past 5 years for you to be growing now, right? Like you optimize the company for short-term revenue and short-term profits.
Yeah.
So let's move on to another question.
Okay, here's someone. Any plans to get into the NeoCloud stocks?
NBIS, CRWV. Which one is CRWV or energy? So we kind of like touched on this. These are all completely out of my wheelhouse. I'm not sure I have more to
Oh,
say
core
on it, so
weave.
I'll pass to you, Dustin.
I have nothing to say. Pass
Okay.
to the comments.
All right. Let's go on to another one, if we have any more.
So this is more about Savvy Trader. Someone's wondering if there's the feature coming to Savvy Trader about learning to analyze stocks.
So I think they're talking about the earnings hub score.
The bringing earnings hub score to Savvy Trader.
I don't know if it was we were hinting at before the earnings hub score was released. We were hinting at we're gonna build a way to help users like look at stocks the way you do, which
I gotcha.
we didn't end up bringing to Savvy Trader, but it is on our other product, Earnings Hub.
Earnings Hub. So the Earnings Hub score helps like as a rudimentary way of like looking at a stock to four of its sort of like core components: revenue growth, um, EPS growth, which is profitability or profit growth, basically, as well as its price earnings ratio and price sales ratio. Those four metrics are being sort of like analyzed and compared to the 500 most popular stocks on Earnings Hub. And that's how we sort of determine an Earnings Hub score. And I actually use that as a sort of a first step as to determine whether or not like a stock immediately has some weight. But one of the things that it's important to point out is that not every stock that I like has a great Earnings Hub score. Perfect example of that would be like Bumble. Bumble, I think, has an Earnings Hub score of a D, and I'm still accumulating that despite a D Earnings Hub score. Part of the reason is because Bumble has had one-time charges that affect their EPS. And they also haven't been growing, which affect their EPS. But the reason I like Bumble is because the price of this company, the market cap of the entire company, the amount of money that it would take to buy all of Bumble is much smaller than just 1 year's of revenue. And they're pumping out cash to the tune of roughly 200 million annualized per year. And they're trading at roughly 600 million. So in like 3 years, they'll pump out more cash than their entire market cap is worth, unless some disaster happens and they, like decline in revenues and profits for some reason. So those are the reasons why I like that company, and those things don't show up in Earnings Hub score. So
To be a
yeah,
little bit more direct, the score is what the score is today, right? So
right.
like an A can become a D can become an A. So it's
That's right.
letting you know where it is today, and then you have to figure out as an investor where you think it's going to go tomorrow.
That's right. That's right. Yeah. All right. What else do we have, Adrian?
We do have someone talking about QS. I know we've talked a lot about quantum in the past. I don't know if you want to touch on that for our listener here.
QS is QuantumScape, which I hit on a couple moments ago, which I used to own, no longer do. They're working on more efficient battery technology for electric vehicles.
Oh, so they're not quantum computing.
No.
Okay. um,
So maybe
I
they
don't
should
know.
change their name.
That was
I
my bad. Sorry, guys.
No. It's a fair point. I think they came up with their name before quantum was, uh, uh, as popular as it is today, which even now is not that popular.
And then one other one I thought you guys could touch on. Someone's asking about Zeta Global.
I think
That one I don't know.
I got this one on my on the community as well. So let me look at Zeta. It's been a while since I looked at it. So omni-channel data-driven cloud platform that provides enterprises with consumer intelligence and market automation software. It serves enterprise customers across multiple industries, including financial services. Okay, so it is in the IT sector. I don't know much about this company, but again, like this is one of those where even when I looked at it before, I was like, wow, this is pretty impressive. It does have an earnings hub score of an A, revenue growing 41%, which is exceptional. EPS growing 85%, which is better than exceptional, right? Like if EPS is growing faster than revenue, that means their profitability is growing
Hamid,
even
can you
faster.
click into the earnings hub score just so we can
Yeah,
show it off a little
absolutely.
bit and see where it plots in the charts themselves? So that like
Yeah, so
85% growth. Yeah.
it's pretty substantial. And then yeah, so price earnings ratio is not bad for a tech company, 25. Price sales ratio is not bad for a tech company at under 4. But yeah, so like when you look at these, the earnings hub score and the sort of like fundamentals of their data, it looks fantastic. And then you look at their earnings, which has been growing every quarter. There might be some seasonality in Q4 of 2024 versus the 2 quarters following, but yeah, this is a pretty solid company. On the surface, I love it. What I would do next if I was interested in investing in them is I would look up who the CEO is. I would start watching interviews with the CEO. I would listen to their past earnings calls, which you can do on Earnings Hub, and then sort of like make an assessment as to whether or not I think it makes sense to start a small position in the portfolio. I am currently not looking to add additional stocks, but if I was, this would be an interesting one to look at for sure.
I
Yeah,
think we
and
should.
actually, the fact that the stock, by the way, is down 42% in the past year does not scare me at all. Like this is actually like a positive as far as I'm concerned. That means like revenue has been growing, but stock price has not reflected it. And if anything, that's like that means there's opportunity for upside as far as I'm concerned, right? All right. Anything
Okay,
else, Adrian?
I think we should wrap this episode. I think we did
All
a
right.
lot of we got to a lot of listener questions. If we didn't get to your question, feel free to hit us up either on social media or in the next episode of Buy Whole Rant.
Next episode, we're gonna have a lot to talk about with Netflix and Tesla, and yeah, there should be a lot of good stuff. A lot of like earnings season is basically kicked into gear.
And reminder, if you want access to Earnings Hub Pro with the EHS score and all of that, you could get 50% off the Pro plan using code BHR50.
And I believe that code only works for the next day, right?
Yeah. Oh, yeah. Totally forgot to mention that. It's only
And
valid for 24 hours.
We'll put it in the comments, and we'll make sure it works for at least the next day, so that you have an opportunity to take advantage of it. 50% off Pro. All right, awesome. Thanks very much, everybody.
Thanks, everyone.
I'll say bye. Bye.